Technicals is not mumbo jumbo at all. This is Talking Technicals on Money Life. Joining me again today, Michelle Schneider. She is Chief Strategist at marketgauge.com. Ms. Schneider, it's great to have you back on Money Life.
Thank you so much for having me. And I guess it's not too late to say Happy New Year, even though we're in February at this point.
Well, I kind of think it is too late, except for the fact that you and I have not talked this year. So that makes it okay. Like, I tend to think that once we get into February, we're not really saying, hey, give me your outlook for the year, because we're past the New Year stage. But this is important because all that happened in January, in a time when you and I weren't talking, was that the market reached new highs. And quite honestly, I'd rather know what you think of the new highs than what your longer term outlook is right now. So market's gotten to record highs, but there's a lot of stresses and there's a lot of doubters. Where are you on what happens next?
Well, yeah, I mean, it's certainly new highs in, like you said, in certain areas. So we can look at the Dow, the SPY, and the Qs. But I've always been majorly focused on what happens, what we call the inside sectors of the U.S. economy, which would be the small caps, the retail sector, and transportation. And I think they're really going to be the ones to tell the story. And of course, over the weekend, we had Powell on 60 Minutes, and a lot of people are reacting to that and have been, I think, a little overreactive to the Fed. That's why we had the big rally, because this anticipation of 6 cuts, which has now been reduced to 3 cuts. And really, so I think we can forget about all of that. And like I said, let's watch what happens with small caps and retail in particular, but even transportation, because what they're saying is, okay, we like those new highs and they're kind of running on their own fumes. And clearly the ratio between what's happened in the small caps and the growth stocks is at this historical widening. But what's really, I think, what we need to watch for right now is how does the real economy and these sectors adjust to the reality that ZIRP is really over, and not even a good thing to want to go back to. And how do we adjust to a normalization of interest rates somewhere around 5.5%? I'm not talking mortgage rates. And also inflation. It will never get to 2%, or at least not for a long time. But what does it look like at 3 or 4%, barring something really horrible happening with geopolitics, of course? And that's what I'm looking at. I'm looking to see what these two key areas do. So retail right now is sitting on major support, underperforming, but not showing any real signs of stress. Small cap, same thing. Transportation is actually consolidating near highs, not all-time highs, but certainly 2024 highs. And so what that's telling me is if you're patient enough and you know how to look at companies that can survive the new higher interest rates, obviously not being able to borrow money on junky companies that are worth nothing, but now finding companies that actually have real value, it should be a lot of opportunity for the rest of the year.
Interesting. There's a lot built into that. By the way, Powell's comments signal that we might only have 3 rate cuts, but there might be bigger rate cuts, which would be the same impact as 6 if you actually got all the way there, though I'm not expecting it. And in fact, I've been laughing about the 6 rate cuts for the year because I have never had a guest on who agreed with that, even though the market was pricing that in. When you are looking at the opportunity set right now, if you're seeing the opportunities there, what's the story with the Magnificent Seven? And how much of the Magnificent Seven has made this market high a head fake? In other words, yeah, we've got a market that's reached a high, but we've had no breath.
Well, there's certainly a factor of that, but I think you have to look at it very differently in that the Mag 7, minus Tesla now, of course, have really been telling their own story. And I have talked to a couple of economists who do a lot of number crunching, and these are more independent economists, so they're not necessarily number crunching for the government like we know many of them do, who have said that, like, if you take a stock like NVIDIA based on its PE, if you plug in all the numbers, it's actually quite cheap in terms of how much this thing can continue to grow. And I think that's how you have to look at each one of them individually. If we look at Amazon, it hasn't launched Copilot yet, but Copilot is the type of program that I think could be so revolutionary to how people work. It's much more of a mainstream adaptable AI technology than anything I've heard about yet. So that means Amazon can really grow. And we can look at Apple. I mean, Apple, I know it's sort of been a joke with the goggles that have come out for $3,500. But the truth of the matter is, it's kind of like the bulky phones, cell phones that we had in the beginning, where nobody really wanted to carry around a box and a big old thing. And now look at us. I think they'll eventually figure out how to evolve that headset into something that people actually want to wear. So, that's a growth company. So the real question is, how does that help us as a U.S. economy? And we know that that's really where I think the rubber hasn't quite met the road yet, because we're seeing so many other companies, as you said, Market Breath, not doing that well. And so that is what I think, A, we have to watch for. B, we have to realize that the growth companies are in their own fumes. And depending on your time frame and your risk, you could probably still catch moves in those. Pray that you get any kind of correction to buy it cheaper. But there's so much more to look at right now. And that's kind of how we're focused. What does all of this mean as people are more and more virtual, like you and I are right now? What does that mean for society? What does that mean for a trend?
Right.
What does that mean for opportunity and investments? And that's kind of how we're looking at things right here.
Which are the sectors you're investing in? Which are the sectors you're avoiding?
Well, EVs, since we talked about Tesla being one, EVs, we came into this year, and I wrote a whole report, so it's not like I'm just saying this now, in December, that EVs would probably be the worst place to invest in 2024. And it's not because we believe that EVs are going away. They're not. They'll be the future, no doubt. Just like self-driving cars will be the future, and maybe flying cars will be a future. I'm not sure if I'll be around for that, but still. The point is, though, as an investment, it was pretty obvious that, and maybe this happens with the growth stocks, maybe not, but it got well ahead of itself. And so when last year we saw infrastructure was really a problem in terms of charging up your cars, particularly if there are power outs from excessive heat or excessive frost, that used car sales were not moving, that Hertz announced that they weren't going to be renting EVs, that Teslas were getting more and more problems along the way, that pricing was too high. I mean, it was pretty obvious that we were going to see this massive correction in EVs. So I think that's probably the number one place that I've been talking about avoiding. Will we reach a bottom at some point, but we don't know what that is yet.
And where are you going to?
Where I'm going to is, okay, I was thinking about this before I really started seeing how popular these diet drugs are becoming, the GLP-1s, the Ozempic. And it started me thinking about the vanity trade before this year even began, but now I'm even more excited about it now than I ever was because, so let's go back to life as we know it, right? What's happening? More people are connecting online. More people are working online. Obviously, we can go home now and put these headsets on and not even talk to each other and go into a movie or a conversation but never see each other. However, at the same time as people are pulling back from actually mingling, and we certainly see that in the dating arena as well, they are also all of a sudden going, you know what, I finally have a way to lose weight. And so my idea started when I started looking at people and talking to people, and they're like, last year we went out, we traveled, this year I need to feel better about myself this year. And this is a person who might not necessarily even be thinking about diet, but hair, makeup, skincare, fashion. These are the things where I started to say, people are saying all about we, now all about me. And now this diet drug has come on the scene and it's getting more and more popular. And so what I'm thinking now is the more we disassociate from each other in a virtual world, the more we'll need to connect in the real world in some way, but it may be more social than any other way. So if you can all of a sudden feel better about yourself because you finally found a diet secret, and let's hope it works without major side effects, that you can keep the weight off. Because we know people yo-yo diet, right? I mean, dieting has been something that's been popular forever. But dieting where you could actually have it work and sustain it by having an injection once a week, which eventually will go maybe to once every quarter, to once half a year, to once a year. Then all of a sudden people go, wow, I feel better about myself. I want to go out. I want to meet people. I want to look good. I want to do this. I want to do that. And I think that's a megatrend that's just now going to get legs, really, because of these diet drugs.
Well, and we'll see whether or not the legs are skinny legs or not as we see how the diet drugs work. Because remember, I've had another guest on in this very segment not long ago who was talking about the same kind of trend. And one of the things he thought was that people are going to try these drugs and these drugs will become the next, how do we go on diets? We're on them, we're off them, we're on them, we're off them. And that's not what they're supposed to do. He just said, look, you know how Americans are. That's where we'll get to. As you look at this market, you and I typically talk a couple times a year. So if we're not going to talk for a few months, as we get further into election year market with everything that's going on, will we be reasonably happy at that point? I mean, do you worry that there's anything here that would drop the bottom out of this now that we've hit a high?
Well, of course, I always worry. Who doesn't worry, right? The wall of worry. But yeah, in a few months' time from now, first of all, it's an election year. So we know typically election years are bullish. And the government, and including the Fed, will probably do whatever they can to make sure that we don't go into any kind of free fall in the economy or the market. So the only caveat that I can see is so far, food prices, by the way, are still extremely high. So we still have that level of inflation. But it's will a super cycle come back in inflation as we go on in the year? And we can name 5 things that can create that right now. The top of the list, of course, is what's going on in the Middle East. And then if we stop doing as much as we did in Ukraine, what does Putin decide to do to get himself going again now that he's sniffing blood? So and BRICS, which is all tied into geopolitics. Any of these things, I still believe we could have a super cycle in commodities. I believe it's coming. I believe we bottomed out in inflation. And it's just a matter of what is the trigger. And if that happens, I think that will be the impact on the market and probably everywhere in the market. But it hasn't happened yet. So I think we got a few months, so we have to really worry about it.
Well, the good news is we'll be talking with you again a few months down the line. So we'll see how it plays out. Meanwhile, Mish, thanks so much for joining me on the show. Appreciate it. We'll talk to you again soon.
Thanks so much, Chuck. It was great to see you.
That's Michelle Schneider. She is chief strategist at MarketGauge, marketgauge.com for more information, on Twitter at Market.